We use an exponential moving average 5 period, that's an EMA 5, and we're going to make that black. Exponential average moving average 15 period, that's an EMA 15, and we're going to make that one blue. And then an exponential moving average 60 period, that's an EMA 60, and we'll make that green in our examples. So what you need to do is you just open a chart, and first of all, so that your charts look the same as ours, right-click on the chart and select Properties, and then change the color, background color of the chart to white, change the color of the bull candles to green, and change the color of the bear candles to red. And then once you're done that, click OK. And then you need to add the moving averages in MetaTrader. The little button with the F, X, and the plus at the top is your indicator button. You can add the indicators by going down to the trend and then selecting moving average. And you're going to add all 3 moving averages to the charts themselves. And once again, you need to add an EMA 5 to your chart. That's an exponential moving average 5 period. Make it black so that your charts look the same as ours. You need to add an EMA 15 and make that one blue, and an EMA 60 and make that one green. And then once you're done that, save the charts. I'm just going to show you this in MetaTrader 4 so that you know how to do it and can follow along. Just to show you here with an example, our first step when we're entering a short trade is we need to determine that we are in a strong downtrend. To do that, as I said, we use 3 different criteria. First of all, looking on our charts and the colors of our lines, the EMA 60 is the green line, the EMA 15 is the blue line, and those both need to be pointing downward for us to meet the first criteria. The second criteria is that the EMA 5, which is our black line, is below the EMA 15. So looking here, the EMA 5 in this case is below the EMA 15. And finally, the EMA 15, the blue line, is below the EMA 60. And once those 3 criteria are met, we have established that we are in a strong downtrend. We look for the retracement. So you just open up MetaTrader here and then right-click on any symbol in the chart window on the side, and then just click Chart Window. That will open up a new chart. And then once you have that, first thing we're going to do is right-click on this chart and click on Properties. And we're going to change the background color to white. I'm going to change the bull candle color to green. And I'm going to change the bear color candle to red. And then I'm just going to click, I'm going to change the foreground color to something that shows up over top of the charts and click OK. I want to go up to the top here and make sure that I am actually looking at a candle chart. And once I zoom in a bit, there's what our charts look like after I made those quick changes. Okay, and now we just need to add our indicators. So we're going to click the Indicators button up here. Just click on the little down arrow, go to Trend, and then select Moving Average from the indicator list. And the first one you want to add is an EMA 5. And we're going to make that black in color, so select black from the style. And then just to make it show up a little bit better, I usually select the second line so that it shows up a little bit bigger. And just make sure that the MA method selected is exponential and not simple. You don't want a simple moving average. You want the EMA, which is an exponential moving average. And once you've done that, just click OK. And that will add the black line to our chart. And then we want to do it again. We're going to go to Trend and then select Moving Average from the indicators list. And this time we're going to add a 15 period exponential moving average. So just type in 15. Make sure you've got exponential selected. And this one we're going to make blue. So just select the blue color and click OK. And now we have 2 EMAs on the charts. And then finally, we're going to do it one more time. Go to Trend, Moving Average. And we're going to add a 60 period moving average to the chart. And this one, just select a green color and click OK. And now we have 3 moving averages on our charts. Your chart should look something like this. Maybe your colors are a little bit different, but this is close. And then once you've done that, we want to save this chart for simple access later. So again, just right-click on the chart, go to Template, and then select Save Template. And it's going to come up with a template name. Just type in whatever you want here. Maybe you call this Trading System 1. and click Save. And now if I open up any other chart, let's just do this. I could open up a Euro British Pound chart here. Now I can right click on this chart. I can go to Template and I can select Trading System 1 that I just saved from it, and all of the work that we've just done will be applied to that chart, so your charts are easy to access at any time. Once you've added your indicators to the chart, as I just showed you in MetaTrader 4 itself, your charts should look something like this. You'll have 3 lines in 3 different colors, and if you followed our suggestions for setting up the properties, it'll be a white chart with a blue line, a black line, and a green line. And also be sure to save your charts. This is important. It'll make it easier for you to follow the videos. Once again, to do that, you just right click on the chart itself, select Template, then select Save Template, and just enter a name and click Save. This will make it so that you can access your charts at any time as you go through the videos, or apply this template to your charts. And finally, just to give you a basic overview of what we're doing here and what's to come, this system is a trend system. By trading with the trends, we increase our chances of winning on trades. And to begin with, you should be using a 1-hour chart. So open up a 1-hour chart right now in MetaTrader, apply your new template to it, and then move on to the next video, and we will teach you how to find short trades or sell trades, and we'll give you some real examples of short trades as we go through it. To begin with, let's just start with the rules for short trades. This is a trend trading system, so the first thing we need to do is establish that we are in fact in a downtrend. In the case of a short trade, we want to make sure that we're trending downward before we trade. So we use these 3 rules to ensure that we are in a downtrend. The EMA 60 and the EMA 15 are both pointing downwards. The EMA 5 is below the EMA 15. And the EMA 15 is below the EMA 60. Once those 3 criteria are met, that's our establishment that we are in a downtrend. And then at that point, we wait for the price to retrace to touch the EMA 60. And when that happens, we enter the trade. I will show you this on the charts in a second, so if it's not clear yet, it will be. Once we are entering the trade, the system is meant to be entered with 2 lots or multiples of 2. If you're just getting started, use 2 lots, and then make sure you watch the advanced videos to understand what I'm talking about by multiples of 2. And we place a protective stop loss 40 pips back from our entry point. And then once we're in that trade, we manage the trade as follows. We set the take profit level on 1 lot to 40 pips. So our first lot exits when we make a profit of 40 pips, the same as our stop loss. And we set our stop loss on our second lot to break even when the first lot is exited. So in other words, we're entering with 2 lots. Once the first lot has a 40 pip profit, we take that lot out of the trade, and at that point we move the stop loss for the second lot. We leave it in the trade. We move the stop loss to the break even point, and we trail the stop of the second lot by 40 pips. Just to show you here with an example, our first step when we're entering a short trade is we need to determine that we are in a strong downtrend. To do that, as I said, we use 3 different criteria. First of all, looking on our charts and the colors of our lines, the EMA 60 is the green line, the EMA 15 is the blue line, and those both need to be pointing downward for us to meet the first criteria. The second criteria is that the EMA 5, which is our black line, is below the EMA 15. So looking here, the EMA 5 in this case is below the EMA 15. And finally, the EMA 15, the blue line, is below the EMA 60. And once those 3 criteria are met, we have established that we are in a strong downtrend. We look for the retracement. And when the retracement occurs, that's our indication to enter the trade. So we've established that we are in a downtrend. We wait for the retracement, and showing that on a chart, here's the portion of the chart where we establish the downtrend. We wait for the price to retrace until it touches the EMA 60, which is the green line. And at that point, we enter the trade. We enter with 2 lots, and we set a stop loss at 40 pips back from our entry point. So in this case, we would enter short as soon as the green bar touched the green line right here, showing it on the chart. We enter short with 2 lots, and we set a stop loss 40 pips behind. Once we're in the trade, we exit 1 lot. Our first take profit level is set to 40 pips ahead, so the trade goes in our favor, and the first lot gets automatically exited with our take profit level of 40 pips. At that point, when that happens, we keep our second lot in the trade. We set our stop loss to 0 for the second lot, so we set it to the break-even point. So our stop loss would be moved up to here for the second lot. And we continue to trail our stop at 40 pips behind until the stop loss is hit. So in this case, the trade would have continued in our favor. We would have made a profit all the way down here. Our trailing stop would have followed all the way down to the bottom, and we actually was off this chart where it would have finally stopped out. If you don't have trading software that allows you to trail the stop, every time you move 40 pips ahead, the trade goes in your favor 40 pips. Just move the stop itself 40 pips step by step as the trade itself moves in your favor. Okay, and let's just move on to MetaTrader 4 and take a look at some real trade examples on the MetaTrader platform so you'll know better how to look for the entry points and to manage your trades as you're in them. Okay, let's take a look at a couple of example trades using short trades and this system. Just taking a look here, I'm looking at the British pound US dollar pair on the 1-hour chart, and I'm looking at the time frame from January 28th up to February 3rd. This is a trade that we entered. Just taking a look here. First thing we need to look for is that we are in a strong downtrend. We take a look to see that the 60-period exponential moving average is pointing down. The 15-period moving average is pointing down, so they're both pointing downwards. Then we take a look to make sure that the blue line, the 15-period exponential moving average, is below the green one, and the black line, the 5-period EMA, is below the 15-period EMA. So that's our signal that we are in a fairly strong downtrend. Now we need to wait for our entry point. We want to make sure that we enter at the right time. So we wait for the price to retrace and touch the EMA 60 here, which it did. And that was our entry point. At that point, we set our stop loss 40 pips behind and our first take profit 40 pips ahead. And we stay in the trade. Our first take profit level is hit at 40 pips. At that point, we move our stop loss for the second lot to the place that we entered at, and then we just leave it in, trailing the stop at 40 pips. If you don't have software that can trail the stop, such as MetaTrader, you should move it every time the currency pair moves 40 pips in your favor. Move the stop 40 pips in your favor. In this case, I trailed my stop on the second lot, and it actually ended up stopping out on February 1st. Let's just take a look at the results of that trade. So we entered short at 1.6166 after determining that we were in a downtrend. The price retraced. It touched the EMA 60, so we entered. Our stop loss was set to 1.6206, which is at about this point here. And our first take profit level was set to 1.6126, which is about here. The first take profit level was hit, and our first lot exited automatically. And we moved the stop loss to the break-even point at 1.6166. At that point, I trailed the stop at 40 pips, and the second lot exited at 1.5886 on February 1st when the stop was hit. So the total profit on that order was 40 pips on the first lot, 280 pips on the second lot, so 320 pips total times $10 per pip is $3,200. Just taking a look here where we exited, the currency pair made its way down all the way down to below the 1.5860 level, a few pips below that, and then it retraced, and our stop was hit on the second lot on the 1st of February. So quite a profitable trade. That gives you one example of how to use the system. Let's take a look at another one here. We're going to look at the US dollar Swiss franc. Just zooming out here a little bit, when we take a look at the US dollar Swiss franc chart, this is the 1-hour chart on November 5th. Taking a look here, we first needed to determine the trend, and in this case we are in a strong downtrend. We use our criteria to determine that. The EMA 60 is pointed downwards, the EMA 15 is pointed downwards, and taking a look, the EMA 15 is below the EMA 60, and the EMA 5 is below the EMA 15. And and we're actually looking at it at this point here on November 5th. And then at that point, we've determined we're in a strong downtrend. We wait for the price to retrace until it hits the EMA 60, which it did right here. And we set our stop loss. We enter with 2 lots. We set our stop loss 40 pips back to this level. And we set our first take profit to 40 pips ahead, or this level. And in this case, the trade went in our favor. We hit our first take profit almost 2 hours later, or just 2 hours later. At that point, we moved our stop loss to the break-even point, and then it almost stopped out again, but it didn't quite do it. What ended up happening is that it came within 5 pips of stopping out on the second lot, but it didn't. It turned around and continued to move in our favor, and the second lot ended up stopping out on November 9th. Just taking a look at what happened with this trade, we entered short with 2 lots at 1.0181. The initial stop loss was set to 1.0221, which is 40 pips back of this level. We take profit on the first lot was set to 1.0141, and the first profit was taken out 2 hours later. The first lot was taken out 2 hours later when that take profit level was hit. At that point, we moved our stop on the second lot to 1.0181, and we trailed the stop at 40 pips. The second lot almost exited within 5 pips the same day, but it didn't. It ended up exiting at 1.0100 on November 9th. So total profit on this trade, we ended 40 pips on lot 1, and we ended up with 81 pips on lot 2. So in total, we made 121 pips in a trade that lasted just over 3 days. So again, a nice, excellent, profitable trade, and a good example of how to use this system for short trades. Okay, with some examples out of the way, let's just talk about where to go from here. At this point, you should move on to video 4 to watch the rules for long trades. Basically the same as short trades, just backwards, but you still should watch the video. And then once you're done watching that video, practice making short and long trades on MetaTrader. You can do this either with a demo account or with historical data, but you do want to practice finding those entry points, looking to determine the trends. The more you practice, the more profitable you're going to be with the system. So move on to video 4 and then move on to doing some practice. Begin with here, let's just talk about the rules for long trades. These are largely the same as they were for short trades. They're just backwards. So we establish, first of all, that we're in a strong uptrend using these 3 rules. The EMA 60 and the EMA 15 are both pointing up. That's the first criteria that must be met. The EMA 5 is above the EMA 15, and the EMA 15 is above the EMA 60. So once those 3 criteria are met, we determine that we're in a strong uptrend, and at that point, we wait for the price to retrace to touch the EMA 60, and when that happens, we enter the trade. When we enter the trade, we enter with a 2-lot trade, or multiples of 2. We'll talk about the multiples of 2 in video 5. And we place a protective stop loss 40 pips back from the entry point, and that's just to protect us in case things don't move in our favor. And once we're in the trade, we need to manage that trade. So we set our take profit level on 1 lot to 40 pips. When that first take profit level is hit and our first lot is exited, assuming that the trade does move in our favor, we set the second stop loss, for our second lot to the break-even point when the first lot exits, and we trail that stop by 40 pips. And if you don't have software, if you're not using the MetaTrade software for your actual trades, you can trail your stop by simply moving it every time the currency pair moves in your favor every 40 pips. So taking a look at an example here, and again, we'll look at an example here, and then we'll go to the charts and take a look at a couple of examples there. We first determine we are in a strong uptrend. We do this by taking a look at the chart. The EMA 60 and the EMA 15, which is the green line and the blue line respectively, are both pointing up. We take a look then to ensure that the EMA 5, the black line, is above the EMA 15, the blue line. And finally, we take a look to ensure that the EMA 15 is above the EMA 60. At that point, we determine we are in a strong uptrend. We look for the retracement, which will be our entry point. So the uptrend has been established. We wait for the retracement, and in this case, looking at the chart, the price is up. We've determined an uptrend. We wait for it to retrace until the point where it touches the EMA 60, and that is our entry point. We enter the trade with 2 lots and a 40 pip stop loss. So we enter here with 2 lots and we set our stop loss 40 pips back to protect ourselves in case the trade doesn't move in our favor. And we exit 1 lot at 40 pips profit, so we set our take profit level to 40 pips. And when that first lot exits, we move the stop loss to the break-even point, and we trail the second stop loss until it is hit. Okay, so taking a look here, let's take a look at a couple of long trades on the charts themselves. We're looking at the US dollar Swiss franc on the 1-hour charts, and I'm looking at the time frame from December 15th up to the 18th. And just looking at the chart in the morning, or in the afternoon actually, on December 15th, taking a look, we've got the EMA 60 and the EMA 15 are both pointing up. We have the EMA 15 above the EMA 60 and the EMA 5 above the EMA 15, so our criteria for an uptrend is met. We are in a strong uptrend. At that point, we need an entry point, so we wait for the price to retrace and touch the EMA 60, which happened on December 16th. At that point, we enter with 2 lots. We go long on the trade, and we set our stop loss 40 pips back. This trade was entered at this point here, 1.0361, and we set our stop loss back to this point here, 1.0321. And then we leave the trade in. We set our take profit 40 pips ahead for the first lot, and we leave it in the trade. When the first lot is exited with the take profit, we move our stop loss to the break-even point, and then we just let the second lot ride while trailing our stop at 40 pips, and it actually exited up here. And just to take a look at the data from the trade, we entered long with 2 lots at 1.0361 on the 16th of December. Our initial stop loss was set to 1.0321, and our first take profit was at 1.0401. The first take profit was hit a couple of hours later. At that point, we moved the stop loss to the break-even point, and we trailed the stop at 40 pips. The second lot was exited the next day at 1.0496. The stop was hit. It raised up to above the 1.05 level and dropped again. So then we have a profit of 40 pips on the first lot, 135 pips on the second lot, for a total profit of 175 pips. So very profitable trade, 175 pips in 1 day, and a good example of how to use this system for long trades. Okay, so let's take a look at another example here, just zooming out a bit. This one is on the 28th of December, and taking a look at the chart, we're taking a look to make sure that we are in fact in an uptrend before we even consider trading. So looking at the EMA 60 and the EMA 15 are both pointing upwards. And then looking again to match our next criteria, the EMA 15 is above the EMA 60 and the EMA 5 is above the EMA 15. So we determine that we are in a strong uptrend. At that point, we just need an entry point. So we wait for the price to retrace and touch the EMA 60, which it did here. And we enter with 2 lots. We set our stop loss 40 pips back, and the take profit level on our first lot 40 pips ahead. And then once the trade moves in our favor, our first lot is exited with 40 pips profit. We move our stop loss to the break-even point and let the second lot continue to ride it out until the stop loss is hit. Just taking a look at what happened with the trade, we entered long with 2 lots at 91.53 on December 28th. The initial stop loss was set to 40 pips back, 91.13, and the take profit on the first lot was set to 91.93, which is 40 pips ahead. The take profit was hit early the next day, and we set the stop loss for the second lot to break even when that happened and trailed the stop at 40 pips. The second lot exited December 30th at 92.37, so we have 40 pips profit on the first lot and 84 pips profit on the second lot for a total of 120 pips profit, and this trade took about 2 days. Started on the 28th of December and exited here on the 30th of December. About currency pairs to trade, time frames to use this particular trading system with, and I'm going to give you an easy money management system For your success as a trader, you should always use a proper money management system. It's the #1 way to ensure that you stay profitable and don't experience huge drawdowns on your account. Money management isn't difficult. It just adds a little bit of time to each trade. I'm going to teach you an easy system to use to ensure you have a profitable future in Forex. To begin with, let's just talk about currencies and time frames. Since this system is very much a trend system, we're trading with the trends. You should try to stick to currency pairs that have a tendency to trend. Now, any currency pair will actually do this at one point or another. Some of the ones that are easy to trade and are trending all the time include the Euro US dollar, the British pound US dollar, the Euro British pound. The US Canadian dollar has a tendency to trend for long periods of time. US dollar Japanese yen, British pound Japanese yen, US dollar Swiss franc, and British pound Swiss franc. All of those currency pairs have a tendency to trend. Some of the easiest ones are the ones that you're going to be more familiar with. For example, if you're in the US, you're more likely to know the US dollar better than any other currency pair, so you should stick with a pair that includes that. If you're in Europe and you use the euro, maybe you would stick with a currency pair or start with a currency pair that included the euro. You're going to be more familiar with what's going on in the area, and you'll be more able to get notifications if anything changes with the economy or anything like that. So that's my suggestion. Stick with one of these currency pairs which have a tendency to trend, and try to start out by trading a currency pair that is your local currency if you can. Best time frames to use with a system like this. The best time frame when you're starting out is the 1 hour charts, but you can also trade the system with the 4 hour or daily time frames. You wouldn't want to go to a shorter period of time, and if you did move up to the 4 hour or daily time frames, you might want to use a 60 pip or 80 pip stop instead of a 40 pip stop. When you're starting out, stick with the 1 hour charts, and if you want to try something new as you learn the system well, move on and try it with the 4 hour and daily time frames. The longer charts will give fewer false signals, but then of course you're also going to get less trade signals in general. And then finally, let's talk about money management a little bit. As I said before, this is one of the most important things you can do to stay profitable. Money management allows you to risk less, or at least manage your risk, and grow your account more over time. So let's give you an easy system to use to manage your money in Forex. The money management system that I'm going to cover is a simple one that will allow you to vary your trade size so that you're always risking the proper amount. It's quite a simple system to use. All we need to do to use this system, we need to know our stop loss. Doing that with that information, we can calculate a per pip value, and from that calculate the amount that we're going to risk on any given trade. And then we can use that information to vary our trade size according to our account balance at the time. This will all become clear as you get through this video, so let's just talk about this. First thing you need to understand is how to calculate a per pip value. This isn't really difficult. We need to divide 1 pip with proper decimal placement divided by the current C exchange rate at the time, and then multiply that by the amount. So for example, with a US dollar Japanese yen pair, a proper decimal placement for a pip is 0.01. With any other currency that didn't include the Japanese yen, it would be 0.0001. In this case, it's 0.01 divided by the exchange rate. If it was 92.52, we would divide by that and then multiply by the amount that we're trading. So if we were trading 1 lot, we would multiply by 100,000, and that would give us the per pip value of $10.80.87 or 1081. When the US dollar is on the right side of the pair, so in a case like the Euro US dollar where the US dollar is over on this side, we don't need to calculate a per pip value because we know what it is. A full lot is always $10 per pip, and a mini lot is $1 per pip. With any currency exchange or currency pair that has the US dollar on the left side of the pair, you need to calculate a per pip value just like this. With our per pip value, we can now calculate how much we can risk on a trade. So from using the number we calculated before of 1081, if our stop loss is set to 40 pips, then 40 times 1081 means for every lot that we're trading, we will be risking $432.40. And from that, we can also work to calculate a trade size and then calculate how much we are allowed to risk. Your proper trade size is always calculated from your current account balance, and to calculate it, you should use a percent R or percent risk level. We always limit our risk to 2%. As a more experienced trader, you might move that up to 3%, but especially when you're starting out, 1% or 2% is a common number. So if your account balance was 120,223, we could risk 2% of that, which is $2,404.46. So then we can then calculate a trade size. That's quite easy to do. We just go allowable risk divided by risk per lot equals the number of lots to trade. So we calculated 2404.46 is what we're allowed to trade, and we calculated that we were risking $432.40 on every lot traded. So that means on this trade we could use 5.56 lots as a trade size. In most cases you obviously can't trade that, so we're going to round down. If you were trading full lots only, we could trade 5 lots. If you had an account that allowed you to trade both full lots and mini lots, then you could trade 5 lots and 5 mini lots, not 6. We always round down. And with this system, since we're using multiples of 2 lots, you would divide the number in half. So if you calculated that you could trade 4 lots, you would trade 2 lots on the first lot, would be considered the first lot. When we were exiting with that 40 pip stop, we would actually trade 2 lots at that time, and then leave the other 2 in the trade as our second lot. And it isn't really set in stone. If you could trade 5 lots, you might trade 3 as the first lot and then 2 as the second lot, or vice versa. You can vary your trade size a little bit here. What we do want to ensure that we do is always risk less than the full allowable risk, and you should keep it as close to your allowable risk as possible. That will help you grow your account over time. And just to close out this training video and the whole training series, just wanted to leave you with some final thoughts. Before trading any Forex system, you should practice until you understand it well and feel you will profit from it. The more you trust a system, the easier it will be for you to trade. And when you begin trading a system that you trust with real money, you'll be much more likely to profit from it. So practice until you're comfortable with it and it works for you. Whenever you trade, even if you're just using a practice account, get used to using money management. It's important. And when you're beginning, instead of trying to trade 5 or 6 different currency pairs all at once, try sticking to 1 or 2. This is going to help you when you're learning. It'll help you to learn those pairs well and see how this particular trading system works with those pairs, and you won't have to worry about the differences between 5 or 6 different currency pairs. You can just focus on 1 or 2, and it will make the whole learning experience easier.